Albert Einstein said that the hardest thing to understand is income taxes. And in this video, I hope to be making it a bit more simpler to understand for you. Welcome to this channel. My name is Jacques. I'm the host of Practitioner Accounting Services, and in this video I'll be explaining what makes an income tax and how you get to the amount that you actually have to pay over to the South African Revenue Service. We are going to look at 6 parts in this video. Part 1 would be all the incomes that you have. We'll have a quick look at the definition of what is income, what's the difference between income and gross income. Part 2 would be essentially your deductions, what deductions are allowed for a lot of people that consider this to be their expenses. Part 3 would then be to get to your taxable income, and part 4 would be calculating the actual tax amount. Part 5 is your rebates, and part 6 is essentially then the amount of tax that you eventually at the end of the day have to pay over to SARS, or in some cases that SARS have to refund you, and we're all hoping for that, don't we? Alright, part 1. Income can be defined on using an online dictionary as monies received for work done or through investments. In SARS, in the Income Tax Act, it carries a slightly different meaning. Even though the term income is defined in section 1 of the Income Tax Act, the way in which the Act itself uses the term causes a bit of confusion as to what exactly they mean by income. But one thing is certain, that there's a specific definition with the list of items that's included for this definition for the term gross income. So gross income is the total amount of worldwide incomes received by or accrued to you. Now there's a list of things that could include, such as salaries, incomes from businesses or trade, being a beneficiary of a trust, rental income, pension and other annuities that you receive, royalties and the like. Now all of these added together, you can have more than one of them as the case may be to an individual, but all of these added together becomes your gross income. Then from gross income you deduct your exempt income, because not all amounts that you receive are taxable. The majority is, and the principle is that all are, but the fact remains that there are certain incomes that are exempt from income tax. Now I've listed a few options here, such as agricultural income, local interest incomes, gratuities, tips that you give to your server or your waiter at the restaurant, services delivered internationally, but there's certain T's and C's that apply. And then incomes from a specific number of bodies, entities and associations. Now these are specifically listed for in section 10 of the Income Tax Act. So this brings us to the end of part 1. You have gross income and exempt income, and if you deduct all of the exempt incomes applicable to you from your gross income, that will give you your income figure. The part 2 then essentially is the deductions, or as some people see it, expenses. Now the deductions itself is also a 2-part section. Part 1 is applicable to those who trade, and part 2 is applicable to everyone. Alright, so please, if you're just here because you're an employee, please bear with me for part 1. It should be quick. So part 1, in order for you to generate income, you generally have to undergo certain expenses. Now the principle is that as long as these expenses are in the production of income as defined above, this deduction is allowed. And there's a specific section, a specific clause in the Act for this. This is section 11A, but it also lists a whole list of specific deductions that is allowed for an individual in a trading situation. And a lot of companies also use these deductions for corporate tax reductions. It is allowed, it's applicable. So some of these deductions include things such as, well, 11A says anything that's not specified in the production of income. But then you also have things like interest on the purchase, interest on the loan you had to commit to when purchasing a new capital asset. The exception is that this interest is not applicable to home loans. Okay? Then you also have legal expenses, wear and tear, repairs and maintenance, all kinds of these kinds of things all of these kinds of expenses that you would find generally in a business. Bear in mind, business, not company. I've made a video about that. I'll put a tag up here, right about here, just to link back to that video if you want to see what's the difference between a company and a business. But from a business point of view, those expenses can be deducted for income. Okay? For tax purposes. Great. So there's a couple of aspects then that are not allowed to be deducted. And this is applicable especially for individuals in a trade, but also for general individuals. Now these expenses are summarized in section 23 of the Income Tax Act, and they include things such as your maintenance and your personal expenses. Things such as food, clothing, your accommodation, your home, school fees, rent, stuff like that, water and electricity for an individual. These are considered personal expenses and they are not deductible. In my previous video, 3 reasons why you should use a company, I mentioned specifically things such as coffee. For a company, that can be an expense, but for an individual trading, that's a personal expense, and in this case, this is where that is not deductible. Okay, so then there's also a general rule, section 23F, that says any expense that is not in the production of income. So the general inclusion is any expense in the production of income can be deducted, but any expense not in the production of income is specifically excluded and disallowed under this section. So that's the end of part A. So part B is deductions applicable to all people. Individuals in trade can deduct the above mentioned items under sections 11 to roughly 23, but everyone can deduct the following deductions from their income tax. So, or from their income when calculating tax. You can contribute up to 27.5% of income that you've received throughout the year to a retirement annuity or a pension or a provident fund. The principle is that as long as you have contributed to this kind of fund, you can claim all of your retirement contributions as long as it is within 27.5% of your income. And that's calculated up to this point. So after this point you would have a subtotal, and then the next section would be section 18A, deductions. Now this is non-profit organizations that can register as a public benefit organization, and once they're registered in terms of this, they are what we consider a section 18A organization. Any donation you make to such an organization should be returned with a section 18A tax certificate, and as long as these donations are less than 10% of your income, you are able to deduct that from your income for tax purposes. So the first one applicable to everyone is retirement annuity or retirement contributions, and the second one is then section 18A contributions. Then one that everyone can deduct as well is divorce maintenance. Now this is a sad subject in itself, but if you have to pay maintenance to a spouse or an ex-spouse or to the children of that spouse, of your children, what the case may be, you can deduct those maintenance payments from your income tax. However, those maintenance payments have to be included in the receiving party's gross income. So that's the end of part 2 of the deductions. You have your the trade deductions, and then the applicable ones to everyone, which is your retirement annuity, your section 18A deductions, maintenance, and a couple of others. If you are unsure about one, just send us an email, ask freely in this channel, and we will gladly answer your questions. But now we get to the point where we've made a list of all our incomes and we've made a list of all our deductions. What does that help us? So we deduct all of our deductions from our incomes and exempt incomes, and this then gives us taxable income. Now once we have taxable income, this is the amount that we then calculate our tax on. And we calculate the tax based on this screenshot. There's a sliding scale that I will add on the screen right about here, just to give you to show how your tax is calculated. If your taxes in this case is between 0 and 195,000 Rand, you pay 18% of tax on that. If it's more than 195,851 Rand, you start paying a marginally increasing amount on every Rand that you earn. Then, once you've calculated the amount of tax, you have what we call rebates. Now this is part 4 of the video. Now we have 3 primary rebates. The first is a primary rebate. That's roughly 14,067 Rand for individuals for the 2019 year. In the 2018 year, that amount was 13,635 Rand. And this is applicable to every individual under the age of 65. If you're over the age of 65, there is a secondary rebate available. And if you're over the age of 75, there is a further tertiary rebate applicable to you. Then we also have the medical tax credit, which is a confusing calculation on its own, but it works out to about 415 Rand per person per year that you then deduct from your tax here. And once you've deducted your rebates from the amount of tax payable, you essentially have the tax amount payable. Now bear in mind that you've already had, if you're a salaried employee, you've been having tax deducted, PAYE deducted from your salary every month, and this has been paid over to SARS already. So those employee payments or employees tax payments that's already been made on your behalf by the company is then deducted from the amount of tax payable that we've just calculated here. And if the amount of employees tax is less than the total tax payable, you have to pay SARS. However, if you have paid more tax to SARS already by means of employees tax, then SARS has to give you a nice refund. And that's it for this video. As mentioned before, my name is Jacques. This is Practitioner Accounting Services. If you have any questions regarding tax, please feel free to let us know in the comment section. Please subscribe, and if you like this video, please hit the like button. We'll see you in the next one. Have a great weekend.